what I'd like to do is to delve into our tools that we can use. They're there for your use to accomplish your estate planning. Various types of retirement accounts. There's IRA accounts, there's 401k accounts, there's pension plan accounts, there's profit sharing accounts. There's a whole host of very, very complex, legally, very complex retirement plans out there. And I try to encourage my two kids to invest every penny they can in these retirement accounts, because what's happening is when you put the money in, what happens? It goes in and you get a tax deduction when it goes in. Whether you put it in or whether your employer puts it in, there's no tax. There's a tax savings. If your employer gave you a choice, says, I'm gonna give you another $100 of income, or I'm gonna put $100 into your 401k, which would you prefer? I would prefer to have it go into my 401k because, number one, I don't pay any tax on it. It goes in tax-free. There's no tax on that contribution until I take it out, hopefully way down the road. So the retirement plan is very attractive because you don't pay any taxes when the money goes in. And it accumulates in that account tax-free. And that's a very potent weapon. Over a period of 20, 30 years, these retirement accounts can really, really amaze you how fast they grow if there's no taxes being paid. The theory is when you take it out, you're no longer working and you don't have as much income. So when you have less income, when it comes out, you pay tax, but hopefully at a lesser rate. That's the theory. How does that retirement plan pass if you die? They do not pass under these intestacy rules. They don't even pass under a will. Very special rules say if you have a retirement plan, you have to execute something called a beneficiary designation form. It's got to be executed. You got to sign it. Sometimes your wife's spouse has to sign it too. But if you don't sign a beneficiary designation form, what happens to the money? It goes into your estate and your will apply to it if you do not have a beneficiary designation form that's valid. Most people will have a beneficiary designation form that's valid. Therefore, those proceeds will go out to the designated beneficiary. And usually it would be a spouse or kids. So that's the way that works. And when the money comes out, whoever collects the money gets to pay the what? The tax. They get to pay the tax. Whoever gets the money gets to pay the tax.